Hello and welcome to Macro Mondays, brought to you by David Gockstein. I'm your host, Landy, and today is April 20th, 2026. I hope everyone's had some fun. Well, even if you didn't have fun of which I am referencing, I hope that you had a good day. We did see that Bitcoin fell through the $74,000 level on a close open, but immediately came back up to test $76,000. So, where did we leave off on Friday? We're going to look at Bitcoin to start, of course, today, and take a look at where we were on Friday when I spoke a little bit about this. So, we had the Friday candle come up and hit our $78,000 target overhead on any closes, especially above the $76,000 level here. I mentioned that you want to see around $74,000 to $76,000 hold, 73.5 kind of being an area that it could swing around. And that's essentially what we saw on the close open from, kind of the move down over the weekend. And now we have seen that Bitcoin essentially is closed right on $76,000, getting a rejection after trading slightly above it in yesterday's session. Now, again, if we start to see, I would say around the 73.5 level, we've either already head down to test 72, or if we see any closes at or below that $73,500 level, I would be looking directly to 70 to 72 again. Anywhere below there, keep a close eye on 68 to 69K. If it's dropped, very highly likely that Bitcoin's come back down for at least the top side of the support and a slight front run above that at around $65,000 to $66,000 over time, if it didn't immediately go for it upon dropping 68 to 69. That, of course, would open up the entire bottom side of this range here between 65,000 and 62.5. And then if there was any breakdown below there, I'd be looking for expansion down to actually retest the lows, 58 to 60. Any breakdown below there, somewhere around the mid 50s, 54 to 56, kind of bracketing a very important 55K level, and obviously lower. But Bitcoin is quite a ways away from that at the moment. That means that if we do see it trade back above yesterday's high, we're very likely going for the close open at 77 to the overhead resistance at 78. If we do see any kind of even lower term time frame price action trade into and above $78,000, the whole range up here between 78 and 80,000, 80,500 is fair game. Anywhere above there, 82.5 is on the board, 82.5 to 83. And then, of course, we've got $86,000 to 89 being the main overhead resistance after any recovery, especially on a close of around that 80,500. I would mark, the mid to low 80s at 82.5 to 86 as a very important area on your charts if you didn't already have it. And we start to see any kind of reclaim of the 78 to essentially $80,000 level. So how does that line up with a Bollinger Band set? Well, we've got the upper second right there in the zone overhead at the 78 to $80,000 zone on the $78,000 side, of course. And we have the upper third standard deviation headed towards that monthly level at 82.5 to 83K. Now it is slightly below it, but as long as Bitcoin's trading above the basis, this is going to continue to head up. And again, the basis band is right around that $72,000 or so. That's an area of support that we need to see hold up, of course, at the 70 to 72 if we do see a downside move in the markets. And of course, anywhere below there, you see lower first standard deviation perfectly lining up with right around 69, 69.3 here. That being kind of the last level that Bitcoin needs to hold on a closing basis. If it doesn't, then we'd see a test down below because that is also where the lower first standard deviation away from the basis is. So just keep a close eye on it. Another thing to note is that we do have, momentum turning over. So it is kind of pressure against price right now in terms of momentum because of the weekend move down. But be aware, if you are on the bearish side of this, that as the Bollinger Bands extend to the top side, even though we could be preparing for a move down, we can still test higher first. towards that upper second or even upper third standard deviation area. And, it's kind of a time period where on the weekly, we've seen now a closing higher low set on the close above $72,000 because we did get that, but it's still a basis band rejection. Let's go ahead and turn off the local support and resistance zones of interest here. And much like I talked about on Friday, this is a retest of the basis band or a mean reversion play. And it could play out further. I mentioned this up to the upper first now is at $86,000. So right around this high over here on a closing basis, more importantly, because remember the high here is 86 on a close to $89,000 on a swing. So again, that's that really big important weekly level that I pointed out just a moment ago on the daily to the upside. If we did see, the main overhead resistance at 78 to 80 reclaimed, and then of course that monthly level at 82.5 to 83, then 86 to 89 is fair game. That is where the upper first standard deviation is. Now we did have the upper second now get below the high after we had the weekly close come in, which was at $98,000. Now it is at right around 96.5. So just be aware of that. As the longer that we see Bitcoin playing between the lower first standard deviation and or the upper first standard deviation, the more time that it spends between, or you could just say closer to the basis band or 20 simple moving average, the more we'll see the Bollinger Band set go into a compression. Right now it's going to start setting up for a range, that range being around 67. And I would argue even to 68, and the upside here being 86. So this is the thing about this is as we see a range set up, you could very likely see the entire range get hit. Now on the upside, doesn't do much below the upper second, right? Which is now below the high at 98. So it's below resistance. So not much to do or be excited about below the upper second and really below the lower second. It's just a retest of the lows. Now, of course, if you're accumulating Bitcoin, you're looking for another leg down or something like that for possible accumulation. As this for me personally was an accumulation zone on the lows in the low 60s, right? Below the prior all-time highs of 65 and 69. I view that as accumulation in terms of, scaling lot sizes. So that is for me, down as far as Bitcoin is willing to go. And that's where I'm, essentially began my sizable laddering, which lot sizes get bigger, the lower price goes, to pull entry down. And in this case, there's not much to be had for someone like myself here. It's all about where do things go, or how high does this go, or does it top out here around this area at 78 or not? And in reality, we would know that on any closes below 70,500 this week or $70,000, depending on your chart. That would look like a high put in. Granted, a higher high on a close and a swing, but then it's all about that higher low in the weekly at $65,000, which is the most recent low, which is a higher low close now. And for me, in the way that I do analysis, I needed to see the close above $70,000, and what did I want to see? I wanted to see, so we got the swing above 70, and then we got the close essentially right on that swing. So that's fine. I mean, I would have liked to see, what did we get the close at? Close came in at 73,800. I would have liked to have seen 74 above this swing, but it is kind of whatever. Above 72 is where we needed to see the close come in for the higher low. But there's not much to do for me except, I'll be honest with you, short hunt. I don't think it's ready yet as kind of proof of holding some of the zones. Outside of lower term time frame scalps, there's nothing really too interesting right now. On the short side, it's all been long side for a couple weeks now. So, well, a few weeks in this case. So 3 weeks closed. And then, of course, 1 day closed now. What have I been telling you about? I've been telling you about looking at oil and using that to kind of compare to Dixie for risk on versus risk off moves. Oil clear top in as of last week, right? We kind of talked about this on Friday. Opened above the $84 level there that is marked, but didn't do a whole lot, off the swing. A nice move up, of course, to where the highs came in to test right around the open before the dump off of Friday, but not too much doing here. Oil is going to tell you the truth about what's going on in the actual global markets in terms of risk on versus risk off maneuvers. It is the most sensitive to supply and demand disruptions. And right now, there's still a steady flow of ships filling up in the Gulf of America and the Gulf states of the United States. So, and Alaska for that matter. And that has seemed to have taken some pressure off of markets. But of course, there is the deadline for the ceasefire coming up. We haven't seen too much. Really, to be quite honest, there wasn't anything really moving through the strait anyway, in terms of any normalized traffic. So even if there is conflict that begins to occur post ceasefire, speculators might drive up prices, to be honest with you, but it's not like there's a massive supply of oil that's been moving through the strait that is unsanctioned. So realistically, what I've been looking at when it comes to Brent is, and I noted this, I didn't pull up the chart, but I noted this on Friday that it closed right at 90, right at the 90 to 95 level. We had a 92 close. It's essentially 90 to 95 for WTI. It's a little bit tighter on the window here. It's around, I have my line wrong here. It's around the $92 even region and almost 96 for the support zone. And it held after swinging down below. And realistically, I didn't mark this after the fact, by the way. This has been here for a while for those that want to go back in the videos. I forget which weekly it's the same set of weeklies that WTI is off. It's the same general area. But in this case, holding up at the support, could we see this drive back to the upside? Sure, this absolutely could. Am I sold on it actually going to any of these crazy prices? Not really, no. I'm seeing a lot of craziness again as a result of news, and price appreciation could occur and maybe even run the top side back here again. It's all about closing above 115 to actually go up and test the in this case 116 to 140 area almost. For WTI, that would be the equivalent of recovering 90 to 95, getting through all the daily resistances and then testing 115 to 130. I think that we see the market continue to stay fractured because of the stress put on the Brent side of things, right? And it's not really, look, insurance costs are lower, but for logistics and supply, in terms of shipping and the route for tankers coming to the United States, it's a longer journey, but also it's, somewhat offset without having those higher premiums for insurance. So, I think that we're going to continue to see this kind of a fractured market in terms of pricing until, like I mentioned, there is an all clear in the strait and there's some sort of a deal actually solidified there. And I think that, if you want my personal thoughts, any kind of an actual deal that is confirmed by both sides, in this case, the United States and Iran and whatever leadership is there, which it sounds like they have fractured leadership, and that's something that is not unsurprised. It's not surprising, and I'm unsurprised, I should say, by that. For anybody that's listening to me on David's show in the mornings on the breakdown or money in politics, as it has been lately, it's not really, it's the mosaic structure and the decentralized structure does lend itself to power struggles, and of course IRGC is making its move in which you could kind of call a soft coup, to kind of take control away from the political leaders, and the Artesh, which is the military, aren't really doing much in that regard, at least that we know of publicly. But there's definitely a power vacuum that is attempting to be filled by multiple players there. So what is my point here? My point is that you're likely going to see that the oil markets remain fractured, meaning that you're going to see, although they've always been fractured in terms of pricing, they're usually sticking pretty close in parity with some premium and discount here and there between the two. But as the United States becomes more energy dominant in terms of not just production, but in terms of exports, we're likely going to see this continue, but more normalization on the Brent side of things, and Gulf oil isn't really going to occur until there is, and even if there is, it's going to take a while. If there isn't all clear in the Strait and normalized traffic moves through, I still think that it's going to be a bit of a fractured market if there is a regime that acknowledges a deal and the United States puts together. Even if that is the case, I think that things will still remain contentious in the area, and I think that the United States is still probably going to hang around, which would likely continue to have deals made for United States energy. If you catch my drift there, I have the feeling that that's the way things are going to go. Of course, what do I know? I'm just a speculator. But yeah, let's go ahead and take a look at traditional markets as well. And for WTI, 90 to 95 is what you got to watch. Back above there, then there is a chance for recovery towards 98 to 102, and then above there, looking essentially 105 up to 112 is kind of the main area to pay attention to. Anywhere above there, it's going to be expansion into 115 over 130 up there. Anywhere below 84, we can look right down to essentially, you call it 76 to 80 at this point at that swing low. There is some other areas on lower term timeframes that I'm watching. Specifically, it's 74 to 78. We already saw that 79 already got tagged, but you can just call it 76 to 80. Anywhere below there, things start to fall apart back to the base of support around 68 to 72. By the lower third standard deviation there. That's where 72 is coming from. All right, let's go look at traditional markets. Dow has not recovered the 49,600 or 620 level up here, which is kind of, what you want to see, this consolidation prior to the actual all-time high being put in. You want to see that recovered to actually go and make a new all-time high. And I've mentioned this above the upper first, it's fine, 48.5. For continuation to continue testing this consolidation around the 49.6 to 49.650 area, and then eventually push through to 50K and above. If it does fall through, be aware of the upper 47s around 47.8, but it's really going to be all around, that 47.2 to 47.5 here, where the basis band is, right around that support resistance area of interest. So keep a close eye on that. We didn't have a high put in on NASDAQ or SPY for that matter, but, a pullback coming into Monday session, not anything too crazy. And in this case, if it comes back and holds the highs, somewhere around 25, 7, I would say 25.8, because of where the upper first is, to around 26.2. That would be the main area of support. If it starts to fall apart, look to 25.5 to 25. It's right around 25.5. Start closing below 25.5, around the 25.4 level. It's looking like we're probably going to go back and test at minimum around the basis, in the 25K to 24.7 to 8 area. Nothing, I think it needs a correction, and a correction would be healthy, quite frankly. Same for SPY. Correction would be healthy. In this case, for SPY, I'm looking around the highs, right? Same as NASDAQ, essentially. When looking at the high side structure, we can go from around that 695, 696 area to around, you could even give it 690 is safe, kind of bracketing that upper first. That's where I'd be looking for some support to come in, is right around the upper first. But if that did start to fail, we're looking essentially, we're looking back to 680, 685, right around the highs here, are going to be fair game right around this area, and I would say that 680 is fair game as well, which is going to put us, right around this low side structure. So 680, 685 rather, to right around 680. Anywhere below there, we're looking 670 as a high possibility, between 670 and 675, being the primary area that I would be paying attention to. And yeah, it's kind of where I'm at with it. Those are going to be the two primary areas, so we'll just kind of mark that up right now so that I've got it as reference for you. I think this is what I have in my trading software. Let me look. Yep, same levels, right around the same levels. It's a little bit different in terms of the order books and the auction there, versus what I'm seeing here, but right around the same levels. And then it's all about gap fill. I mean, it could come all the way back to 660 if it gets below the basis at 670 or 669. When looking at the 669, you'll see that this was an area that was a high side structure before a big sell-off right around the basis, 669, 670 area. And, it did deviate here, and then we saw it trying to trap it at the highs as support. So just be aware. Mean reversion and a correction from here would actually be healthy. It's just a matter of where does it stop correcting. High side correction, 690 to 695. Anywhere below there, 680 to 685, is what the bulls would want to see as supports coming in. And that's pretty much it for today. That's all I got for you today. Don't have too much else. Does Bitcoin still have the ability to go hit some of the areas to the upside? Absolutely, as long as it's trading above 70 to 72. Although those are nice little lower term downside corrections if it were to go into those areas between now and when I talk to you on Wednesday. That's nice little scalp in lower term time frames. But does it do anything really to structure? No, because this is not a closing low. It's just lower term time frame structural change off of, well, that's not the right arrow, but hey, that works. Let's go ahead and grab the correct arrow here. And yeah, so, but a correction down to 70 to 72 would be fine. If 70,500 or so is lost, though, that's when things start to fall apart towards that 68 to 69K, or just slightly above 69K by the lower first standard deviation, which would open up the bottom side of the range again. This kind of a look and holding above that 72 especially, and hanging around the 74 to 76 support and resistance zone. As long as it stays up here, I would say especially above 72 on closes, and doesn't even trade below 72. Let's say it doesn't trade below 72, but if it were to correct there, and if it that meaning that if it doesn't continue from here and stick above right around the almost $76,000, if you start seeing 74 break down, then 73.5, we're probably looking at a test at the basis at 72. It's still got the opportunity to come back up and hit 78, possibly even go for a a trip up into the 80,000, 80,500 area, and the low 80s is still fair game. There's nothing saying that it can't do it, but it did get a direct test thus far on a weekly at 78,000. So bear that in mind. Keep a close eye on the conditions and the chart. And I should be back talking to you tomorrow on David's show. I think he's been calling it Money and Politics on X. The breakdown will be back soon with his episode 700. I don't know when that is, so don't message me and ask me. And then, of course, you can catch me on Spaces every once in a while. I don't know if I'll be on any tomorrow. But that being said, definitely check back in here on Wednesday for the Wednesday check-in at 9 p.m. Eastern. 9 p.m. Eastern? 9 p.m. Eastern is when I release these. I'm like, wait, I'm looking at the time like, oh yeah, I have to upload this still. At 9 p.m. Eastern, 6 p.m. Pacific Standard Time. And like and share this out there if you did find this information helpful. And throw a comment down below. I might start looking at some other things. I'll go back and I'll look at gold and silver. It just really hasn't been interesting. It's been, it was the big moves that we were talking about prior that started to play out that I wanted to track. And then the big sell-off and the areas of interest that I was looking at on the way down. And now it's, gold and silver have been consolidating in that large, essentially bearish candle sell-off. And not too much else really interesting happening there. I think that oil and Dixie, as it relates to Dixie, and the risk on versus risk off trade is actually much more pertinent to some of the things that we like to look at and track and trade. So at least at this moment. And if there is some things that you'd like me to look at, and sorry, I'm not going to go and look at every meme coin that you put in the comments, but if there is a major or a stock or something that you'd like me to take a look at, go ahead and put it in the comments down below, and I will try to take a look at it. Other than that, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.